What's going on, guys? It's Chris here with Retail Algo Trader. The date is September 4th, and this is going to be a real-time overview for the week of September 3rd to the 7th. For this week, I don't see any trades that I'm going to be taking. Yesterday was Monday, it was a holiday. Premium is kind of down this week already. Theta's kind of kicked in. I'm not seeing anything that has a decent risk reward that I like, so the best trade for me is going to be no trade. But we still have to go over last week's trades. So for CRM, up here top left, we have the 160 to 145 range for Iron Condor. We stayed right in between. However, we did close that trade early. We took a 91% efficiency, so we collected 91% of the total credit we could have for a 31% return on our money. Ended up being about a $57 profit per contract. EWZ up here top right. That one expired worthless in our range, so we collected the full 100% of that credit. Ended up being a 32% return on our money for a $12 credit. Bottom left down here was LULU. We restructured LULU on Friday. It did spike above our 155, 157.5 spread for the top side of our Iron Condor. So we restructured it on Friday. We opened up a 160, 165, and then later closed the 155, 157.5. We closed that for a debit, but we did take in a positive credit from the bottom and top side. So we took in about $70 per contract, but we did risk more to get that. So instead of letting it expire, or instead of turning that trade into a loss, we decided to restructure it, risk a little bit more to make it a winner. And that's exactly what happened. We ended up making a winner. For Netflix, we closed Netflix early. Netflix kind of spiked up and got close to the top side there. So instead of risking it and letting it breach that top side, we ended up closing it out early and collecting 73% of the total credit that we could for a 27% return on our money. Ended up being about a $49 credit. So that's last week's trades. If you guys have any questions, feel free to comment below. If you would like to see these trades exited real time, stay tuned. Those videos will be up here in a second. Check out retailalgotrader.com for automated trading, indicators, strategies. Be sure to subscribe to this channel so you can get our weekly real-time overviews. My name is Chris. Have a good day. All right, let's take a look at Salesforce, ticker symbol CRM. They posted their earnings report August 29th after the market closed. Today is August 30th, 2018. And as you can see on the chart here, we are sitting right in the middle of our Iron Condor range, which is perfect. That's exactly where we want to be. They posted a beat on earnings and revenue. However, quarter three guidance was mixed, which resulted in not a whole lot happening, which is what we anticipated. Not anticipated what the earnings was going to be, but we anticipated it not breaking out above or below these ranges, just based off of implied volatility, max 1 year move, historical what history showed us. So we didn't anticipate it busting out of these areas, and it's exactly what happened. It stayed right in the middle there. So we're going to go ahead and close this trade out just simply because we are sitting right around $60 profit with a max profit of 64. So we really can't take much more. So we're going to go ahead and look to close it out just to lessen the risk of losing any profit and to not have to worry about the trade anymore since we only have 1 day left. So we'll bring the chain over so you guys can see. And as you can see again, we're sitting right around $60 profit. So we're going to look to close this trade out. We'll swing over to our options chain here so you can see we need to buy back the 145 and sell the 143. So if we do that on the bid and ask just to get out of the trades and not have to worry about getting filled on a limit order, we have 7 and 3 with a difference of 4. So that's going to cost 4 right there. And we come down to the bottom here and we see that we need to buy back the 160 and sell the 162.5, which is 6 and 2 for the ask and bid. So that's going to be about a difference of 4 and a difference of 3, so right around 7. So if we do our limit order right around $7, we should get filled pretty much instantly. So we're going to go ahead and place this trade to get out, and that's going to take 7 off of our max 64, right? So that's going to leave us with right around $57 profit per contract on this Iron Condor. And right there, estimated closing PL 57, submit. And almost immediately we got order filled. We'll go to our manage tab just to make sure. And yep, we got limit order filled at 7. So max $64 credit, we took 57, and that's how you do an iron condor right there. We'll see you on the next play. Alright, hey guys, this is Lulu, L-U-L-U. This line right here is the top side range of our iron condor, which we're currently sitting above. So in order to mitigate some risk, we're going to sell a credit spread against it. Looking at Lulu, we were down like 112 bucks at one point when it was sitting up around here around 157, 158. So what we're going to do is sell a credit spread for about $100 to $125 worth of profit. That a credit spread that it will, most likely not hit. So what we're going to do is go to the options tab, and we're going to go with the 160s. That puts a range all the way up here. So as long as we stay under that, we're good for the rest of the day. It's already spiked up like 17, 18 bucks. Well high comparative to its overall move for the year. Its 1 year max move plus or minus was $17. It's up around 17 or 18 from yesterday's close right now. So we're going to go ahead and do this 160, 165 call credit spread. And what we're going to do is sell the 160 and buy the 165, and we're going to get a quantity of 4. That's going to be for 38 and 9, so we're going to have roughly about $28 credit right there. We're going to put our limit order in for 26, and we're going to go to place order. Yes. And we got order filled, quantity 4 and 4. Check our manage tab just to make sure. Where are those spreads? 4 and 4. Link those together as a vertical. All right, and there we go. So now we have a $100 buffer against this iron condor if it decides to come back up and close outside of our 155 range. We'll see you when we close the trades. All right, taking a look at Lulu, it's starting to hold above the 155, which was our original top side of our iron condor. So what we're going to do is close that leg out since we opened up the upper 160. We're going to close that leg out when we paid an initial, or we got initial $20 credit on it. So we're going to subtract that initial $20 credit against whatever we lose when we close it out. So we're going to close it out right now. It's sitting at 350. So we'll close it out on the ask to buy that back and then sell the 157.5 at 136. Okay, so that's going to give us a 212. If we minus the initial 20 credit we had, that's 192. And then for the 160 vertical that we sold earlier, that was $116 credit, which gives us down to 76. So we would, if we did nothing else, we would lose a max of $76 on that trade when our original max loss was around 183. But what you could also do is add to your top side 160, 165 vertical, and you could probably get about another 40 bucks or so per contract. If you added 2, that would put you out and you would profit on this trade. You'd be in a profit zone again, which is what we're going to do. Not everybody, might not have the capital to do that. Not everybody may want to do that, but that's what we're going to do. So what we're going to do is we're going to close out this 155 and 157.5, and that's 340 on the ask and 153 on the bid, which is 187. So we'll put our limit order in for about 185 and see if we get filled. All right, so we got filled with 185. Just double check here. Yep, 185. All right, so 185 minus the 20 initial that we paid minus the 116 credit we took for our 160, 165. We can remove this. We don't need it anymore. We're down to 49. Now if we add to our 160, 165, it's currently at 51 and 7, so that's 44. And again, we had 185 minus 116 minus 20. So that's 49. All right, so we need to cover 49. So what we can do is we can add 2 to the 160, 165. So that's what we'll do. We'll add 2. We'll sell 2 more 160, 165. And basically that'll give us 53 minus 7. For 46, we need to cover 49, so we'll grab 2, quantity 2, and we'll put our limit order in. Let's wait a second here. 53 for 46. Okay, so we'll put it in for 46. And see if we get filled. Looks like it's working. Trying to fill us. Let's cancel or replace. See if we can get filled here real quick. 40, 54, and 8. It's at 46. I'm not sure why we're not getting filled. We'll leave that in there to get filled. We'll see you guys when we get filled. Alright, so we got filled. Up here at the top, we had to do 2 separate orders for the buy and sell because it wasn't filling us on our vertical for some reason. So what this results in is now that as long as it stays under 160, we stand to make a positive on this trade. Basically what we did was we got rid of that 155 we had. We paid 185 for it. But when we paid 185 to get out of it, we had a $20 initial credit, so it dropped us down to 165 negative. But we also had the lower side of our iron condor for 122 to 120, and that gave us a $17 credit. And then we had the new credit we have with the 160. The top side here, the 160, 165 is our new top side for the iron condor, and we have a total credit sitting in that of 230. So when we minus 230 from that, that's a total negative $82 credit that we have now on this trade, as long as it stays under 160. So we mitigated risk on the trade. Well, we took in more risk, but we mitigated loss on the trade. What was originally going to end up as a loss, now as long as it stays under 160, we'll end up with roughly around $80 credit. We'll see when we close out these trades. Alright, this is Netflix. We're going to look to close out the top side here of our Iron Condor. Right here at the top, the 377.5, 380 spread that we had to build our initial Iron Condor. We're going to close that top side out since we're sitting around about 70% collected on our total credit. We're going to leave the bottom side open and just let those expire worthless, and we'll take in the full credit on that. So we're going to come over to our options chain here, and we need to buy back 377.5 and sell the 380. Alright, now what that's going to do is that is going to cost us about $22 or so, but we took in an initial credit of 60. So that's going to leave us with around $35 to $40 profit, and we'll see what it's at once we close these trades out. So we need to close this out. It's at 26 right now, and 7, so about 19. So we'll try to get filled around about 19. We'll go with 18. Okay, so we got order filled at 18. Let me just double check here. Yep, order filled at 18. So what that does is we had the original credit of 60 minus 18. That's 42. So we have a $42 positive credit right there. And then we still have the bottom side open, so we can get rid of the top side. We no longer have that. We still have the bottom side open, which will give us a max credit of 7, so that'll end up around about almost $49, $50 depending on where it fluctuates. Uh, and that'll be what we make on Netflix. We'll see you when we close out the rest of the trades.